Good afternoon, everybody. Today I'm chatting with Bill Sheriff from Encore Energy. Guys, I think that Encore Energy is the leader in this uranium cycle, at least in terms of shareholder returns, with over an 1100% return over the last 5 years. Now, there's three reasons that I believe that Encore Energy has had such fantastic returns relative to other explorers and development stage companies. The first is the fact that they managed to get to production. The second is the fact that they are in very mining friendly jurisdictions like Texas, where the taxes aren't overly burdensome and projects can actually move forward. And the third thing is that they haven't diluted shareholders down that much while getting to production, which in itself is quite a miraculous feat. Bill is an absolute treasure trove of information on the uranium sector, having worked in it since 1986. Guys, I really think that this is an important interview if you are investing in the uranium cycle, where you can learn a lot. All right, everybody, enjoy the interview. Bill, thanks so much for joining us today.
Hey, thanks. Really enjoy being here, Steve.
So let's start off with the big picture. Uranium's come off a little bit from recent highs. It's still, I guess we could say, maintaining a pretty high price level relative to where we were, say, 4 or 5 years ago. Do you think that this is sort of a healthy consolidation, or where do you think we are in this bull cycle? What can you tell us your read of the uranium market is right now?
Well, of course, I'm a bit biased, but I really think we haven't even started the game. We're still in warm-ups. In terms of the big picture for uranium, the recent pullback's exactly what you say. I think it's a consolidation, and frankly, a well-needed one or much-needed one. A lot of the equities had started to hockey stick on their prices, and as soon as you start seeing that, you know it can't last long. So we needed that. The last $15 up on spot, we're done with a total of 300,000 pounds trading on the spot exchange, showing exactly how thin that is. And on the way back down, it wasn't a whole lot more than that. So I think it was a good, healthy correction. We've pulled back to good support levels in the market. Started seeing some good buying come in at the low 80s, and now continue to see that. So I think we're very early in the game. We've got a few decades ahead of us for the nuclear renaissance, if you will.
Do you think we're at a point now where demand is outstripping supply?
Oh yeah, yeah, clearly, and especially when you look at the tenuous state of some of the countries we import from in the U.S. and even in parts of Europe, we're particularly vulnerable to interruptions of those supplies.
So, Bill, you've got lots of experience in the uranium market, which I love. A lot of the people we talk to in the sector, they're, those classic junior market, capital market type people that are just chasing the hottest trend, and they'll talk a big uranium game, but they haven't actually been around that long. You've been around doing uranium since 86. As I said in the intro, you guys actually have gotten to production, which is a really big deal for junior mining investors. But I got to ask you, for somebody who's been around for decades in uranium, how is this bull market different or similar to the last bull market we saw around 2010?
Yeah, I'm going to go back to the '04 to '08 because that's when we spiked out at 140 some dollars. And really, the only similarity is the commodity, that being uranium. Outside of that, the market forces could not be any more diametrically opposed. Very, very significant differences. That one was a rally that had a predictable end in that we had very negative sentiment around the world regarding nuclear power. We had scheduled shutdowns that were occurring. We had countries backing out that were occurring. We had the U.S. Department of Energy selling 8 million pounds a year into the market, on top of it being a weak market. Then, starting in 2003, backing up even a little bit earlier, we had McArthur River, richest mine on the planet, flood. And so that got everyone's attention that perhaps some supplies might be in jeopardy short term. A flood or any weather related event, something that's going to be fixed. Maybe not right away, but it's going to be fixed. And it's not nearly as important as an increase in demand, which we were not seeing at the time. So, you couple that with either two or three, depending on how you count them, floods. Two of them were like 5 days apart at Cigar Lake when they were trying to put it into production. And that was supposed to relieve whatever supply anxieties there were. But of course, that was delayed, and delayed again. You combine that with Ranger, I think, with number three producer at the time in Australia in 2007 was flooded with monsoons. The entire pit flooded. So that was something here again, predictable fix, but it was going to take some time. So another interruption. And the fourth big shoe on that was RTZ owned Rossing in Namibia at the time, and in 2005 or six, they'd said that in 2007 they were closing the mine, that it would be it would have reached its exhaustion in terms of ore. Obviously, they were wrong. It's still ticking along now, some 17 years later. But just the threat of closing that one, and you've got, three of your top four mines in the world going through severe production interruptions, and no definitive vision as to when those would be cured. Sure, you knew they were going to be cured, but you didn't know when. And so there was a real danger of some of the contracts going into force majeure. And that's what caused that spike. And then that got it up to about the levels we are now, about $80, not inflation adjusted, of course, but $80 back then. And that was driven largely by the utilities from 80 to 85, somewhere in there. And then, the last 50 or $60 of that spike were primarily, not exclusively, but primarily hedge fund traders. You smell blood in the water, and they jumped into the market, and that's what you got. But here again, it was a temporary weather-induced perfect storm, if you will, and so it had a predictable end to it in terms of that giant spike. Comparing and contrasting that to where we are now, I mean, this is a 100% demand-driven market. We're looking at in the U.S. is a special situation. I'll come back to it, but on a worldwide basis, we're simply burning more than we're producing. The overhead in terms of supply that was there is not there. Significant amount of the Japanese inventory that was allegedly sold off following Fukushima was actually loaned out to reconcile it on their books due to at the accountant's request. But that's much better than having been sold, because now it's been burnt and has to be replaced. So it's another upward pressure. Same time, you got the U.S. government starting at least two fuel buying programs, one of which they've already initiated, and Encore was fortunate enough to have received the high price of that last year. And you're seeing new reactors built everywhere, even two of them in the U.S. now. Vogtle 4's up and running. Vogtle 3 last year, and down in the Southern Company's newest reactors, first in 20 years. You're seeing Diablo Canyon, new lease on life there. It had been expected to have closed. You're even seeing closed plants such as Palisades up in Michigan that are coming online again. Government just recently cutting a check for $1.5 billion to get that one back online. So, you're seeing that, and the real fact of the matter is this new push has been driven by the need for clean energy. You cannot get to zero carbon with windmills and solar systems as well. There's just no base loadability there. So it's a perfect storm now from the demand side for nuclear. And as such, that's why I think, I often equate being in uranium right now to having the opportunity to invest in oil and gas in 1940 or 50. Sure, the next 5 or 6 or 10 decades are not going to be straight up. They're going to be sometimes that are, really bad years or quarters. But overall, it's been a pretty fantastic, well above average growth area to be in. That's what I see for nuclear going forward.
So it's as some would say, it's going to be volatile, but upwards to the right.
Yeah, absolutely. And there's a reason we're focused in the U.S. I mean, that's one of the, it's still the world's largest consumer, 48 million pounds a year, and that's growing. And neither the U.S. nor the earlier scenario presented takes into account the small modular reactors, which I think someday will become as big of a factor in terms of demand as the big reactors do now. I think they're going to be delayed a couple of years. Clearly, the fuel issue supply, and we can talk about that if you like, but that's delayed even Bill Gates, who has probably an endless supply of money. But the U.S. being so dependent upon imports really makes it a fertile area to try and develop the resources that we have.
So you've been around the sector for decades, and I'm just curious here, maybe putting on my tinfoil hat a little bit, but what do you think really drove the negative sentiment that we saw, say, just 10 years ago in nuclear power generation? Was it just Fukushima? Do you think that there was maybe some big money forces that were trying to sort of create some narrative in the background? What do you think was pushing this anti-nuclear sentiment that we used to see?
Well, I'll go back to and show my age a bit and use an analogy. Selling papers. You sell papers through hysteria, and the media is what drove that. The media, ironically, is probably our best friend now in terms of the green movement going forward. And, sensationalism. And people tend to be scared of things they can't see. I spent a bit of time in the gold industry, and cyanide was the big buzzword there, even though it naturally degrades in sunlight and oxygen. Scares the heck out of people. So you can sensationalize it and create a lot of fervor through the media outlet, whether it's print or visual. And certainly that had a lot to do with it. 3 Mile Island was the subject of a couple of movies, Jane Fonda in particular, that created hysteria, and that was really the first big knocking the legs out from under the nuclear industry. We'd planned 300 plants in the U.S. over the next decade prior to 3 Mile Island. And as we all know, nobody died at 3 Mile Island. It, certainly didn't go according to plan, but there was no real disaster there. And then along came Chernobyl, which was the only true real disaster. I mean, it wasn't good. And here again, it's not to be totally unexpected. A lot of the safeguards were not there on that model of reactor. Certainly some discussion as to whether those safeguards were bypassed in an effort to see how much energy they could get out of the plant. So a lot of human error involved there, but certainly paid a price for it. And then Fukushima, here again, it was certainly a significant roadblock for the Japanese in particular, but the nuclear industry as a whole. But again, fatalities were limited to 0 or 1, depending on how you categorize one guy that I think had a heart attack in the field. But I'm not sure of the exact cause of that. But nuclear industry cites 0 deaths, and it's still the safest industry to work in terms of power generation, being tied only with solar in terms of its safety.
So let's talk Encore Energy. It's the first time we've had you on. What's the quick high-level overview, especially for anybody in our audience who's new to investing in uranium? They probably saw my preamble on Encore, but I'd love to hear it from your perspective. What's the high-level overview of Encore Energy?
Sure. I think the main thing to know about Encore is we're 100% dedicated to in situ production in the U.S. We have 3 of the 11 operating, or rather permitted. 2 of them are operational plants to recover uranium. We're not a mining company. That may surprise a number of people, but we're really we move water and fluids. We don't move rocks. Everything's through the in situ process, so it's much cheaper, much more timely to get into production from a permitting standpoint as well as a capital standpoint, and a whole lot easier and quicker to get out of on the reclamation side once a deposit is exhausted. And to get to these goals, we've kept a very good staff throughout the last decade and a half, and also built it up quite a lot when Paul Goranson joined us as CEO. He brought in an awful lot of talent, such that we're now able to operate 2 plants and then have a bit of safety margin in terms of additional people. With almost all levels of the production scenario headed up by experienced talent, from supervisors in the field all the way up through managers, and then ultimately at the board level.
So, Bill, when I look at Encore Energy's returns over the last, say, we can take the last year or the last 5 years, it is the poster child for what can go right if you're investing in junior mining. I know you don't consider yourself a mining company, but most of the companies in your sector are. Now, I look at a lot of these exploration or development companies over the last 5 years. Their stocks are negative, or they might be up like 100% or something like that. Well, the spot price is up, almost 3x, and it makes you wonder why you would invest in any of these companies if they can't generate positive returns, if the commodity that they're going after, hockey sticks. But
Yeah.
you guys are the leader. We're talking, it's what, effectively a 12-13 bagger over the last 15 years. And just got to ask you, from your perspective, what is it that Encore has done right? Obviously, you guys have gotten to production, which very few companies do, but there's still other stuff that I'm sure you're looking at it and saying, we got this right. And you roll your eyes when you see other junior companies do certain things. So for our audience who are retail investors trying to find the next Encore, what is it that you guys did different?
Well, I think it really goes back to our strongest asset, and that's people. We on it really is the merging of the two teams, Paul Goranson's team and then the team that I brought. Going back a little bit further to the earlier spike that we talked about back in '04 to '08, Energy Metals Corp. I co-founded that with Paul Matisic, and we went from 1.7 million to 1.8 billion in 30 some months, and then ultimately being purchased by Uranium One. So really, it's a track record. Like you mentioned earlier, been in this since '86, so it's not exactly how you'd say our first rodeo, but it's bringing together the talent. And you just can't have enough talent in any industry, but especially in uranium, where we've had basically 40 years of not much opportunity for new talent to enter the business. And that's what we've built, the predecessor company on, and also Encore. And by having that reserve of talent, well more than we're entitled to, I think, and grateful to have it, makes it a lot, certainly nothing easy about going into production, but it makes it possible to achieve your goals when you have that depth of talent. And without it, quite frankly, it's really, really difficult.
So you guys recently sold off a portion of your Alta Mesa project to Boss Energy. Can you walk us through sort of what the thought process here was?
Sure. Alta Mesa is our crown jewel in the company. In fact, it goes into production here within the next 6 or 7 weeks. So that'll add a second producer to us. We'll join a very elite group of only about 5 companies in the world that have two or more producing facilities. But selling off a piece of it was a tough decision. We were approached almost immediately after we purchased the asset by Boss and looking for creative business arrangements. And we went back and forth and had some pretty detailed discussions over quite a long period of time. Looked at all sorts of different business ideas, and we came down to a joint venture on Alta Mesa. Our motivation was to have enough cash to be able to move our entire production portfolio forward so that we could get more pounds sooner. The transaction obviously didn't result in us getting more pounds overall, but it certainly did accelerate the pounds that we have over the next 2 to 5 years coming into production. And that's what the whole thing was about, because prior to that, I mean, you look back 7 and 8 months ago in terms of Encore, we had 60 million in debt. We had 4 or 5 million in the treasury. We were having to live off the financial markets in terms of being able to move anything forward. And when we did move things forward, it was a very linear process. That is one project at a time. And now we have the ability to, with that cash, and we have no debt, 70 million in cash, revenue from one, soon to be two sources. So it's really been a tremendous transformational year for us, or 12-month period. But it does give us the ability to move forward on a number of projects at the same time. And here again, that's going to get us up to production capacity quicker and keep those pipelines full of product.
One aspect of uranium investing that I think a lot of retail investors overlook and they don't focus nearly enough on are tax regimes in different areas. And then we got royalty payments. But something that I sort of think about a lot when I think about Encore Energy and how you guys have had this tremendous success in your equity and as a company is that you guys are in Texas, which is notably one of the friendliest jurisdictions in mining. How important do you think it is to be in a jurisdiction that doesn't overly tax you? And do you think that that is something that when you look at all these different uranium juniors gets overlooked?
Well, I think there are a number of factors, and yes, we're happy to be in Texas. I think it's probably the number one jurisdiction around. And that's from a regulatory stance as much as from a taxation stance. We were able to get Rosita, our first operational well field, up and running and plant in about 20 months from the day that we filed the permit. And that's a testament to Texas being an agreement state. That is, Texas and Wyoming both are agreement states. You don't deal with the Nuclear Regulatory Commission, so no federal involvement, and that makes it a whole lot easier to get through it. It's the same rules and regulations. It's just in Texas and Wyoming, they're both very conservative, very energy focused, very open to do business states. And so they have a motivation to get these projects, into the tax base and provide the jobs and employment and the economic boom from them, as well as ensuring the U.S.'s energy needs. So those are the two states that we have a very concentrated, overly concentrated programs, and our advanced projects are in those states. So that's the big plus for us. And of course, you've got jurisdictional safety as opposed to being, in certain countries that you may end up having a great deposit but never being able to produce it, or having it even expropriated at a ultimately worse end.
So you guys recently canceled an at the market financing, and then shortly afterwards, you guys settled the last of your debt. What sort of cash flows are you guys expecting from production? Have you guys given out any guidance, or can you give us any sort of just rough ballpark of what you guys are expecting to get from the production of Rosita and your stake in Alta Mesa?
Yeah, I think we haven't given out any firm guidance, but I think we certainly won't be at £1 million this year. Within 3 years, we will be at a £3 million a year ramp up rate. Right now, it's a function of securing drill rigs. Once you've got the capacity and you've got the deposit, it's simply a function of getting drill rigs out there. And I say simply, that's probably not the best choice of words, but
Mm-hmm.
it's a matter of fact. You get more drill rigs out there, and it becomes a plumbing issue. How quickly can you tie your wells into plumbing? And that's where we are on that project. And here again, going back to the boss money making us able to work on more than one project at the same time. We're busy working on the satellite deposits that feed Rosita. Alta Mesa is a bit different in that it can fill its capacity at the plant from on site, whereas Rosita is set up to be a hub for various satellite projects that will be have the uranium resin brought in from a field from a remote ion exchange facility located 50, 60, 100, 200 miles away from the plant. So that's really the difference in how we see ramping up. But right now, since both plants are fully renovated, we're ready to go forward on them. Just a matter of getting those drill rigs turning and adding production. So I think that'll give you some idea of where we're headed and how we'll get there and when we'll get there.
So, Bill, you've been generous with your time today. Last question for you. If I'm an investor watching this or a potential investor, what should I be looking out for over the remainder of 2024?
Well, here again, I think we'll end where we started. I think you're going to see some volatility. I don't think there's any doubt about that. And I think you're going to see, the U.S. start finally coming back into production. We aren't the only ones out there, but the U.S. still will be lucky to make £1 million total this year between three producers. We'll certainly exceed that rather robustly in 25 and on. But we've got a long way to go to get back to in 1980, there were 22 mills operating, about 10 or 11 ISR projects, and we were producing 43 million pounds a year in the U.S. So we have the capability. And, there's certainly a big advantage that comes with, being the first to move, that first mover advantage, which really we have in terms of the people and the production facilities and that sort of thing, really enables you to take advantage of that. So it's not that the U.S. is truly dependent on foreign sources of uranium. It's chosen to be dependent upon foreign sources of uranium, like many other industries. We've outsourced for cheap material, and with ISR, we can compete on the world basis for price. So that's the future for the U.S., and we're pretty happy to be in our position in that industry and leading the way.
Well, thanks so much for hopping on here, Bill. And I congratulate you guys on the success you've had. And hopefully you'll keep coming back on here as the company continues to execute on the strategy. And I appreciate your time today.
Absolutely. Good to talk with you anytime, Steve. Thank you.
All right, everyone. Thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Also, let me know what you think in the comment section. Thanks, everyone.